Hey everyone, welcome back to the TraderLion channel. This is Richard here with Ross Haber, and today we'll be talking a little bit about how to handle market corrections and also picking Ross's brain as to what it was like trading during that 2000 bear market, and basically tips and things you should be doing during bear markets to make sure you're not chopping yourself up, getting into trouble, and staying ready for that next uptrend. So Ross, first of all, I'd love to just kind of hear your thoughts about the current market correction and any tips or guidance you have for people who maybe this is their first extensive correction that they're going through, as to how to handle it, how to think about it, and what to look for as to a potential new uptrend.
Sure, absolutely. I would say this, once we're in a correction like we are, and leadership is clearly, let us know that it's in nowhere ready form. Last couple of top 10 reports, I've struggled to come up with just stuff to keep an eye on that's showing some relative strength. Maybe it got a little better since the last report. I found a couple of decent stocks with relative strength at new highs, but again, you just need a stock not to sell off with the market, and that relative strength line becomes super strong on the few that hold up, right? So it's not really telling you a whole lot. I would say this: during a correction, it took me a long time. Between the FOMO and the anxiety of not trading, and you want to make, and all of that, it's taken me a very long time to finally come to that conclusion. You hear me talk about counting cards all the time now, and the deck is hot or the deck is not hot.
Right.
So for me, at this point, I look at it: am I gambling or am I the house? Am I picking up nickels in front of a steamroller, or am I, do I have a hot deck and really have a chance of making some money? And as simple as it sounds and as crazy as it sounds, it's taken me probably to the last, 5-10 years to realize that, that the importance of keeping my brain neutral and positive and ready for when the market does follow through. I would say this, right? I've been putting food on the table trading since 1998, right? So I've definitely, between 98 and 2000, I was very lucky to be at Bill's. And at that point, right, I was a portfolio manager. I'm managing my own money, but I've got a salary from the firm. Let me tell you something, that goes a long way when the market goes straight down for 2.5 years. It's very difficult if you're just beginning, you don't have enough money put away and a family to take care of. Listen, I was young, I was single. I could live on very little. Bill made sure you had just enough to, get by. He wanted you had every opportunity in the world. There was no reason you shouldn't have been able to be successful there or otherwise. So I would, during that period, let's just, going back to some of those big bear markets, the prolonged ones, I would say, during those times, you're not getting far enough ahead. Like, I've learned what the deck has to look like when it's hot. I don't care about catching it a week early or a few days early, because what I'm looking for is the market to set up and go on a sustained long-term uptrend, new bull market, whatever you want to call it. The few days or even a couple of weeks, if you came a couple of weeks after the follow-through day, after leadership was already showing you that it doesn't matter, you'll make a fortune anyway. The most important thing is not losing money until that happens. I can't stress that enough. Forget FOMO. I mean, FOMO should only exist if the market's in a solid uptrend. We're nowhere close to that. I would also say I try to stay as neutral and positive as I can, right? You want to stay neutral and just look at the clues as they come through, right? You don't want to have any bias there. And honestly, it's to be positive, ready, and feeling good when the market actually does follow through is more important than any few dollars you think you're going to make during that time. And I'll tell you, even if you were late for a family emergency, you got whatever, who cares? If we go on when that time comes, even if you were too late, 2 weeks, 3 weeks late to that bull market, you'd be surprised. Between volatility and the way things happen, I've been that guy and come back and I go, wow, I was actually pretty fortunate to have missed that because of this, that, and the other. You never know what's going to happen. Don't drive it's taken me a long time. I come from family that drives themselves crazy, right? So it's been a struggle for me. That's my mom's nature. It's my nature, right? In general, like, I've noticed that. I'm just saying. So that has been the biggest thing for me to learn: to be patient. Don't touch until the deck is clearly hot. And I'll tell you that a big part of why the canceling methodology works is because we are timing the market. We are going to cash because we have the ability to, and being able to go to cash and not take these drawdowns, like even the one we've just seen, it makes such a huge difference. Talk to, whether you're a money manager or not, talk to your friends' money managers who you would have otherwise, let's say, been using, or someone similar to that. I promise you, nobody was out of the market back in, November, December, as the market was topping and been in cash as it all falls apart. So the difference between not getting, knocked down from 16,000 or 13,000 on the NASDAQ, and even if you chopped yourself up one or two times in between there, testing the waters, the difference is enormous. And you do that 2-3 times, and you are so far ahead of the market and everyone else. Once you prove that to yourself, you realize where, and as I get older, I like less aggravation, right? So right. I try to I'll be honest with you, maybe when I was younger, and I wanted to try every little thing. I look for the most aggravation, high probability, aggravation free, high probability trading I can get. So, this is one of those times, unfortunately, where I'd say do anything but sit in front of your screens. And whether exercise, yoga, read a book, right, spend some time with your dog, your kids, your whoever it is. I mean, really do something good for yourself. Get out in nature, go to the beach, take a walk in the woods, take a walk around your block, go get some sunshine, anything constructive other than burning yourself out, sitting in front of the screens and, churning up those bad emotions, because nothing's going to good is going to happen sitting there, right? It doesn't matter who you are. When the deck is cold, the deck is cold. The same way when the deck is hot, it cleans up your mistakes. When the deck is cold, it doesn't matter how great you are. It's going to make you look like a big dump. Everything you've learned, everything it doesn't matter if you don't have the market, right? Just very simply, Bill's already proved to us 3 out of 4 stocks follow the general market trend. Why do you want to be long when 1/4 of the stocks, if you're lucky, and none of the stocks that we look at are going up? It makes no sense, right? But we always want to try. So that has been my big thing. I would also say this: I try to never get too negative. You could see this go on, right, for another 4 months, and it wouldn't be the end of the world. See a nice 4 to 6 month correction, really get it cleaned out before we go again. But it's usually right when I'm saying that and want to see that and start thinking the market looks terrible. I was discussing with you before we started, right, how badly I wanted to short FTNT on Thursday. And that's no joke. I mean, it's uncanny how close to dead bottom it is that I didn't do it, but I was like, man, I should just short 100 shares just to see what happens. And I'll tell you what happened. I would have been up for like 37 seconds and everything, right? And then you see everything reversed. So while I wouldn't be surprised to see it go on for a few more months, I also wouldn't be surprised to, be back on another video with you in 4 days going, isn't it amazing how fast everything turns around? Right. It looked like the market, was going to be dead forever. And wow, and look at all the setups. And so do your best to stay neutral, look for the right, keep your mind clear, but neutral and positive. Make your brain feel good, be ready for when, rather than trying to be early and figure it out first. There's no award for it. You're not going to get far enough ahead, even if you did figure it out. So,
be flexible.
Yeah. I mean, do not stop keeping your lists of stocks, because you just don't know. And that's where you're going to see it anyway. So that to me is cheap, but you don't have to be in front of your screens to do that all day. At this point in the market, you can look at your screens at the end of every day and figure out what's going on until it's time. And like I said, you can even be late. It doesn't matter. The important part is don't touch now, right? Because you're not going to get anywhere right now.
Perfect.
So that's that.
And Ross,
yeah, please go ahead. I've gone on forever.
No, that's perfect. As of right now, that rally attempt is still valid. We haven't undercut Monday's low, so we'll be watching that very carefully. But I'd also love to know, you've talked about waiting for that deck to be hot a couple times. What does that mean for you? What are you looking for in terms of group moves to develop? What does a hot deck look like?
All right. So for me, I feel like I've said it so many times, people probably, the peeps, I apologize for everyone who's heard me say it 6 times already. Very simply, I want to see at least a couple of, ask Bill what he thinks about his methodology for technicals versus fundamentals. I've heard him say it more than once. He'll tell you, cancel limit, it's 70% fundamental. So unless you have that in place, that's another, right? So you need to have the market behind you. You also need to see, right, the right stocks in place for the right reason, meaning, you're going to have a much easier time and bull market when you have two or three or more, some sound, solid, fundamental themes in place, like we've been discussing. Let's call it the metaverse and electric vehicles, which still have huge potential moving forward. And then I want to see traditional slim growth stocks in, your traditional, industries, a lot of the technology, medical, the stuff that changes the way we work, the way we live, the way we communicate. Now I want to see all of the groups that pertain to those fundamental themes, from the semiconductor chips, the software, the components, that push, like we saw in 98, 99, that big internet boom. Will we see a metaverse electric vehicle boom? We've seen a ton of action already in electric vehicles from Tesla, right? But there's still a ton, right, to be done there in terms of electric. The metaverse, from what I've been reading, seems to just barely be getting started. For the science fiction people out there, it looks like Ready Player One will be reality in about 10 years.
That'd be pretty cool.
Give or take, right? I mean, as the technology catches up, it's pretty amazing. As I just started educating myself on the metaverse, and my mind is blown. But anyway, so that I need to see and what will happen when all of those groups that I'm talking about, the legitimate growths, with the canceling fundamentals rallying, because you're going to need, at the end of the day, without that breadth and all of those stocks supporting a legitimate fundamental theme or two, you're not going to get a sustainable, smooth, that uptrend in place. I mean, so that's ultimately what you're looking for, and what I've learned, and I talk about it all the time. And we can look at it time and time again. What I wait for is, before all those stocks start moving, and again, I'm running screens all day, I'm keeping lists, and I know where that rotation is going before it happens, and I try to, call it out along the way, to help people along. But at the end of the day, the proper groups, the first ones to move, are going to be the ones that have contracted their volatility, started putting in a bottom, coming up the right side. Volatility starts to contract as it comes up off the bottom and builds the right side. All of those moving averages start to converge to the upside and get tight behind price. And for me, that's the spot. When I see groups of stocks doing that, and the market, let's say we get a follow through day, that is my sweet spot. Then, that's a hot deck. And when the deck is hot, the same way you want to be out when it's cold, you can pile it on. You want to use margin, that's the time to do it. That's the time to let the trend and the super environment work for you and help make up for however long you've been sitting out. I would say this, I started saying it earlier, right? Let's say I've been in the industry since 94, 95, been managing money for a living since 98. And I've only had, the longest I've sat out of the market to date is that, 2000 correction off the top, which technically was, closer to 2.5 years. Let's say started in March of 2000, ended in November of 02. Dead bottom, keep in mind, dead bottom was in November 02. And I know we're going to go back and look at this. You couldn't make any money. I've been telling Richard this forever. The date is clear in my mind, because I remember the stock I made money on when the market turned. Market bottomed in 02. You couldn't really make any progress until May or June of 2003. So dead bottom, November 02. That's a lot. That's months of frustration. And we'll go back and look at it, and you'll see. It's funny. We just looked. I'm like, Richard, look in May and June of that time. What are the moving averages doing? And I honestly didn't. I have never looked at this before. It just, because we've been talking about it so much. And sure enough, that I wasn't looking for that specifically. I hadn't figured out that this is what I was looking for yet. But sure enough, market was doing the same darn thing, right? It had put in a bottom. Moving averages were all tight, coming up beneath price. And when you see those groups of stocks lining up with the market doing that, you can't get any better than that. It's not a guarantee, but that is your hot deck right there. That's when you can start taking some early positions. Obviously, doesn't mean you can't And honestly, it's easier to manage risk down there. So
Right.
it's, for me, it's like you've got all of this built up potential. You're much earlier than, most of the textbooks talk about, right? Before you're 15%, 20% within, that prior high. If you're
Right.
reading Bill's book, you should be no more than 15%. Um, but this way, you can start getting into these things well before that and managing risk that much easier because again, that, right where those moving averages cross, that becomes typically becomes a significant area of support. And I think you gave it the name. It's like a launching pad, right? And all
Right.
of these stocks typically launch from that point, and you can start getting into a position. You can pyramid the breakout instead of starting at the breakout, like the textbook says. And I'll just tell you, I've had great success doing that. So at the end of the day, do anything constructive with your time while that deck is cold. I mean, now it's
Right.
clearly cold. There's not a stock anywhere that it to be found worth buying, but you'd be surprised over time with the experience. It becomes very clear. And I'll be honest with you, I always say this as well. When it's time to buy, even if you're a few days late, everybody knows when it's time again. You're not going to miss it. And you're better off sitting on your hands and missing the first few days than trying to be early. Stop trying to be early. It's not getting you anywhere except frustrated, chopped up. Maybe you make a little money at best. And when the market finally follows through, you're kind of worn out instead of fresh and ready to go. So it's also, I've learned as I get older, how important my emotional, mental,
Capital.
psychological state of being is, because life only gets more complicated and difficult, right? So, I can get into all the self-help stuff too, right? Everyone, you either make it a good day or you don't, right? When you wake up in the morning, and I can get into all that too. So, you're having to listen, every day's a good day, make it one. So,
Perfect.
Along those lines, you've got to live your life and do what you got to do to support your family first, right? So you got to have a clear mind to trade, because you get nowhere good when your head, is not in the right place.
Perfect. Awesome, Ross. So the key themes there: be flexible, wait for that hot deck, and watch for multiple groups starting to emerge up the right-hand side. Look for those moving averages to converge to the upside. Right now, we're below those moving averages on the indexes. And let's go on now over to the 2000 correction and just hear some stories, some key takeaways from that experience from you, Ross.
All right. First off, I was still, I don't know, in my late 20s around this time, maybe just turning 30. Well, for starters, the high that you have coming off of that 98 to 2000.
Right.
So, you have some serious corrections along the way, so you begin to think that this one's no different, right? And I'm going to bet you plenty, my bottom dollar, we got sucked in here at some point, either as a firm or on an individual basis somewhere in here. And you can see the they never really, they pushed through, and maybe they did for a little before it rolled over, right? So using that same thing, and at this point, keep in mind also, leadership will be holding up. The stronger leaders are holding up better than the market. And so, it's easy to convince yourself to be long for a reason, and not just you or me. The whole firm during this time, including Bill O'Neill himself, we got sucked in multiple times along the way. We never made any money. Everybody got frustrated. But at the end of the day, you continue to understand. And, the number one rule is don't lose a lot of money. And, after you've seen your third or fourth follow through day fail, that's when you put in your little, the most you can buy is 5 to 10%, right? Because if it fails again, you're going to protect yourself. And if it doesn't fail again, you'd rather be adding slowly and a little bit late, right? It's that same lesson. And you can see, so after the market breaks and you fail here, it's probably easy to stay out underneath this
underneath the 50-day
moving average, right? And by here, maybe you look at leadership and get sucked in, maybe you don't. But you can see that's just a push through. I don't know what daily moving averages are doing at this point. But even here, at this point, right, you get the big undercut, you start pushing. I can't remember exactly, but I would bet I was buying stocks in here, right? That we can all look and, you get that it looks constructive, right? You get the volume falls off, you've got the big blue coming up, and sure enough, look what happens. I mean, you almost get cut in half again from 2100 just about to 1100. That's a big drop from there, right? So, and of course, by, Bill's thing, they'll either wear you out or scare you out. And you can see the market ultimately bottoms here in roughly November 02. And it's not like we've discussed in probably just the prior video, just when the market puts in the bottom, it's not an easy ride. Volatility doesn't just go away until the market gets itself sorted out. And in this case, let's say the market feels comfortable with what's going on with interest rates, inflation. We've got earnings season going on. So even if we just put in our dead bottom last Monday, look here. I remember clearly it was impossible, at least for me, to make money the way I like to, in a smooth trend, May or June. I remember specifically market bottomed, still ton of frustration. And all of a sudden, this stock, the most garbage stock to me of my life that I've made the most money on, TravelZoo. Yeah, it had the earnings in place and all that. To this day, I don't think I've met a person on the planet that's ever used TravelZoo, and I can't figure out why you would even use their website. However, 6 months into that year, and well after the market actually put in its all of a sudden, the stock started kicking in. Nobody missed it. Even if you were a little bit late, what if you missed the first breakout on travel? Well, it wasn't only TravelZoo. It's not going to be one that just happened to be the one that I latched on to. It kind of jived with me at the time. And so that's my point for all of that frustration. You'd want, and even here, what award do you win for catching the dead bottom here? Do you know how hard it would have been to even buy stock here and then sit through all of it fails and fails and finally we go here. But this is what we were saying. Look what happens here. Volatility, right? We tighten up, we start moving above the averages, and then look what happens. The averages start to convert. So if you went using that alone, first of all, you'd be sucked in a whole lot less than you will be on the daily, right? So maybe that pulls you in a few times. And if you use progressive exposure and say, I'm never going to be long more than 10 or 15% to get started, and you don't add to clean up mistakes. Let's say you're wrong on one, and then the next, it doesn't mean you buy the next breakout to try and make it. That means you're wrong if you're losing money, and you got to sit back and really, make sure. So not losing money is a big thing. I was talking to Charles Harris a few days ago, and it's funny. He said to me, is like, Ross, one of the things that sticks in my head that you told me years ago is just don't ever sit there and don't take big loss. Don't let it happen. Right. You have to and again, never buy a stock unless you know where your sell stop is and why. You should know exactly how much money you plan on losing, not making, losing before that trade starts. Making money is a benefit when the odds are in your favor. You need to understand how much you could lose, you plan on losing, and that entire plan, you should the only thing that matters at the end of the day is managing risk. Picking stocks and that will come with experience. I would say, honestly, that's not the hard part. The hard part is being disciplined and understanding when not to trade. That's when the disasters come.
Perfect. Yeah, I think we've gone over some really key things here. And even if you were sucked in, manage risk along the way, as you said, and you won't hurt yourself. And obviously, we're not saying 2000 is going to happen. We have absolutely no idea, but just be aware of the possibilities, protect yourself, manage risk. And if you're a canceling trader, wait for that hot deck. So with that, Ross, any last words that you'd like to say? Or
no. And like you said, I'm not trying to be a mega bear here by any means. I've been at this for close to 30 years, and this is the longest correction that I've seen still.
Right.
So
be flexible, be ready. Yeah.
Right. I'm not predicting a big correction. Again, it could be another few months. We could turn around next week or the week after. Let's see how earnings season plays out. Let's see what happens, how people start feeling and talking about inflation and interest rates and that sort of thing. But at the end of watch here, are you ready for this? I haven't said it the whole time. Watch the leaders, watch the rotation, watch how that's shaping up. You will not miss it.
Perfect.
Nobody, you will not miss it. I mean, start keeping that in mind. You know, if you're at the beginning of your journey, the experience will help. The more charts you look at, it will eventually catch your eye and you're going to go, oh, it almost seems too easy once you see what I'm talking about. Wouldn't, right?
Yeah.
It really does almost seem too easy, but I'll tell you, if you can do that and not lose big money, you will get so far ahead of the market and everyone else. And again, it's not a competition, but that's the reason you're doing this, right? You don't need to add, you can do this on your own, and stay way ahead of the pros. And let me at least, I'll tell you this. I started off in institutional sales. I watched a lot of Harvard Business School portfolio managers with entire Harvard Business School teams of analysts turn billions to zero, out of business. Bye-bye house in the Hamptons, bye-bye helicopter to the house in the Hamptons, all gone. So you would be, your mind would be blown at how many professional guys out there like that make billions disappear for whatever reason. They don't do the technical. I mean, I watch guys do this with me and Bill O'Neill shouting at them, you got to get out of the market. And he's like, no, you know, they'll brag about their education and their analysts and Harvard the whole way down until they're out of business. So I would never mention a name, but you'd be surprised.
Perfect. Awesome. I think we'll call it there, Ross. We've gone over some really key things in this video. And to everyone watching, I hope you enjoyed. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And we'll see you guys in future videos. Thanks.